Welcome to REIT Magazine's weekly report. I'm Alan Kenny.
And I'm Matt Bichard. In our first story this week, the U.S. REIT market slightly underperformed the broader equity market in the first quarter of 2013, according to NAREIT data. The FTSE NAREIT All REITs Index delivered a 9.1% total return in the first quarter, and the FTSE NAREIT All Equity REITs Index delivered a total return of 8.1%. This compared to the S&P 500's return of 10.6%. For the 12 months ended in March, however, the FTSE NAREIT All REITs Index returned 18.7%, while the S&P 500 returned approximately 14%. In the latest edition of Quick Study, Brad Case, NAREIT's Senior Vice President of Research and Industry Information, provided an analysis of the first quarter of 2013.
The REITs, although it was a very strong quarter and a very strong month, in both cases they underperformed the broad stock market. And that's not that surprising because of the fact that the REIT market really did outperform the stock market over the last several years. Going forward, I think we're going to continue to see strong earnings growth, both in the REIT market and also in the broader stock market. I won't be surprised if the REIT market lags a little bit behind the broader stock market, given how much the stock market lagged earlier.
3 REIT IPOs were completed in the first quarter of 2013, according to data from research firm SNL. The offerings generated total proceeds of $720.8 million. 2 of the IPOs were completed in January. Data center REIT CyrusOne, which raised $360.5 million, and farmland REIT Gladstone Land, which raised $56.7 million. Healthcare REIT Aviv REIT raised $303.6 million when it went public in March.
Niels Koch, co-founder and director of the Global Real Estate Sustainability Benchmark, joined REIT.com for a video interview at NAREIT's 2013 Leader in the Light Working Forum held last month in La Quinta, California. Koch discussed the results of the latest GRESB survey and the differences in sustainability efforts in the United States and in other countries.
What we're seeing more and more is that the US is catching up. The US is very much focused on a pragmatic approach towards integrating sustainability. Very data-driven, action-driven, opportunity-driven. And that's where things may differ a little bit from, for example, Europe or Australia, where sustainability has been driven more by legislation.
And that concludes this week's edition of Weekly Report.
Be sure to check back early and often for all the latest commercial real estate news and analysis at REIT.com and realestateinvestmenttoday.com.